Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Look around, inflation is everywhere. Some say that it has peaked. You look at China starting to reopen. I will talk about all of this, the economy, the markets, everything you need to know. And if you stay with me, I'm going to show you some key intel about the markets and what you can expect. Let's begin by taking a look at this. Here you can see Shanghai unveils economic support measures as lockdowns ease. So what we had previously was that, you looked at what Beijing, Shanghai, and other places, in fact, 50 to 100 cities, depending on the depth of that lockdown over the last little while. And China was going into a pace that was starting to create a problem for the economy. That was very clear. However, now what we are seeing is a reversal of that trend, and at the same time, stimulus measures to go in and start getting this engine moving. That, of course, may or may not be good depending on the type of stimulus, but this has a positive effect, at least in the short term. When you're real tired and you pound back a few espressos, you get that boost. Now, who knows how long that will last, and we will see. But they are doing something very different than the rest of the world, as I've covered many times before. The whole world seems to be going in this direction of, tightening and quantitative tightening and bringing in their whole interest rates that were historically very low for the ECB in the negative, Japan in the negative, and other places in real terms in the negative. And now what we are looking at here is a big change in direction. China going opposite. Okay, so you can see right here, Shanghai offered tax rebates for companies and allowed all manufacturers to resume operations from June as authorities rolled out scores of policies to revitalize an economy that's been impacted by lockdowns. So that's it right there, okay? Then you have this. Beijing eases curbs. Shopping malls reopen. Okay, so that's key. So we're looking at the two big cities here that have been in focus. Like I said, it was between 50 and 100, depending on the type of lockdown that they were doing. And so that is a huge number of people that affects a lot of people outside of China. Somebody might say, hey, who cares? I'm not there. It's not going to affect me. But understand what happens with the economy. When China shuts down, the world shuts down. Simple matter of fact, okay? And maybe, that would be good to change over time. Maybe, it's good to, create manufacturing and other businesses in other countries, but that's the way it's set up right now, okay? So that's just showing us that. And then we have this. More Russian oil than ever before is heading for China and India, up to 79 million barrels of the nation's oil on ships. Asia is now the biggest buyer of Russian barrels amid what's happening with Ukraine. You see that yourself. The ties are continuing to, be much more bonded, and we see this, really just over the last several months to an extreme degree, but it's been going on for a while. Okay, the currency swap agreements taking place between Russia and China have been there for a while, and they have been increasing. Almost every month I'm seeing some sort of new agreement between these two countries that are creating stronger allies. And, previously this wasn't the case, but it's almost as if it's being forced to happen. And now let's take a look at what this means for the consumers in places where there's tightening. There's been a lot of talk about recession, and I'm sure you're aware, and maybe you've seen it around you. Maybe you've seen people cut back on purchases, or are they spending more than ever before? If they are spending more than ever before, is it cash? Is it money they have in the bank? Or is it based on debt? And here we see this is credit card debt in the United States. Previously, it had peaked out, no coincidence, just before 2020, or the beginning of 2020, I should say. It comes crashing down. All right, why was that? Well, there are many reasons for this. You have people that, they're staying home, and suddenly they're not spending as much money. The restaurants aren't there, the movie theaters aren't there. So they have a chance to kind of catch up and pay off their debt. At the same time, they're handing out stimulus money. So some of that money was going to pay down people's debt. And there are other reasons as well. Now what we see is, guess what? A record high. That's right, record high. Shouldn't surprise anybody for credit card debt. All right. And look, you can make all the excuses. Oh, it's the population, it's whatever. I've seen all types of excuses. This is a short period of time. Okay? This is a short period of time in between one and the other. We have to understand what happens. It is very clear. Okay? You shut the economy down, you create this espresso effect, and what happens? You get the crash. Okay? Young Americans are defying inflation to take YOLO, you only live once, summer trips. That's right, millennials and Gen Z are more likely than older generations to rack up debt and take vacations this summer. You don't have to worry about not having money. That's right, because Visa and MasterCard are going to pay that for you. I saw, there was even one that I showed you here on this channel before, if you remember it, where the company was designed to help people pay off very small purchases. I can't even remember something like $20. Like somebody was buying their lunch and they were able to do a, installment plan. And yeah, that's going to be a small percentage of the public, but it's frightening when you see the numbers. It really is. Look, if you got to pay your Chipotle on an installment plan, then you probably shouldn't be getting it, okay? You can get a bag of oats, all right? The good stuff, oat groats. Get those oat groats. Hey, if you got to get the cheaper stuff, get the cheaper stuff. And that bag is going to last you for a heck of a lot longer, and you can do some good stuff with it too. Anyway, that's all besides the point. 2 in 3 adults avoid social events because they're embarrassed about their financial struggles. New survey reveals that the average American believes that they need an income of $86,000 to feel comfortable financially. Well, what are their expenses? What cities do they live in? I mean, there's a lot to that. But I think it's, to me, important to focus on you, the individual. You can't rely on the stats. You can't look at what other people are doing. And certainly you can't keep up with the Kardashians. But I think it's important for you and I to talk about what's happening and, of course, what we can do about it. Now, I've written 2 books previously, but for those who just want some free stuff, check out How To and Solutions playlist that I have on my channel. You can get that. Just go to my channel page, scroll down, How To and Solutions, as well as the other playlists on there. Okay. U.S. farmland is a hot commodity that's not great for farms. The surging cost of Midwestern acreage hinders the kind of agricultural innovation favored by a new generation of resilient and experimental farmers. Looking for a hedge against inflation, Midwestern farmland might be for you. Across the Midwest, values are up 23% from a year ago, fueled by surging commodity prices. Rents on Iowa farmland have surged 10% so far in 2022. More opportunity on the way. But increasing prices on just about everything ultimately means that people pay more for their stuff. If the farm costs more, if the seeds cost more, if the fertilizer costs more, if everything's costing more, they are going to increase prices that you pay. And sure, we could shop around and we could look for the better deals here and there. We could, make do. But ultimately, there's only so much that we can do. We can grow our own food in our backyard. We can do our best there. We can have some storable food. We can buy today so that tomorrow, when the price goes up, we aren't as affected by it. Or maybe we can kind of, try to bring that forward, right? We want to bring that forward. So anyway, robots pick up more work at busy factories. Workplace robot orders jumped by 40% this year's first quarter, but you could throw people at a problem now. They're going to robots, okay? Flippy the robot, all these different robots. The one I told you about basically eliminating the busboy. So there's going to be no busboy. There's going to be no burger flippers anymore. And like I always say, it's not a glamorous job, but they were jobs. Now you got to be building the robots or you got to be working on the artificial intelligence if you want to be employed, it seems like. Look at what's going on. I mean, everywhere you turn, natural gas skyrocketing. Look at this, though. This is, I guess, good news. Natural gas, Netherlands, okay, that has come down considerably from its peak. It's still much more elevated than where it had been for the years prior, but it's good to know. Now, what the worry is, and I don't think I've included it here, the worry is that there's basically nothing left for winter. So over the next few months, Europe has to get their stockpiles, their storage up. If they don't, Europe is in big trouble. Okay? Simple matter of fact. And here we have it. Maybe perhaps I can finish with this. Here's the savings rate. Here's the credit card debt. I mean, you could see it. It's pretty clear. Personal savings rate, that's the green line. Something that's been declining. This right here was early 2020. When everybody got the stimulus, everybody's staying home, savings rate is up. But what's been happening? Okay? It's been declining. And at the same time, you see the credit card debt increasing. It's just the way it is. Okay? It's obvious what's happening. There is an economic downturn that's occurring today, and that's separate from the markets. So you waited until the end. Thank you for that. Very few will. And I've got 2 points. This is something that I have been looking at and seems to be accurate going way back. Stock markets usually react more aggressively and faster to inflation data. That seems to be the case. Okay, so the points come out or the expectation of that to happen. Oh, inflation is going to be much worse than what we expect because of this and that. And then it comes out and then it's already priced in. It's always going to, oh, it's 3 months from now, we expect inflation to go down. That's good. Therefore, the market starts moving towards that before it even happens. And the economy will lag behind and effects will persist. So what we're seeing now with the inflation, it's not just, okay, inflation is starting to subside and you go to the store and immediately there's an impact there, or, you know, your company is suddenly not going to lay anybody off because they say, well, you know what, if we could just hold off for another year, you know, everything should be okay. It's not like that, okay? It's not like that. First things first, when you see a stock coming down, the company lay people off. That's it. Okay, the expectation is that the United States will see 1 million layoffs. But how does this happen? Well, the first round, usually, depending on the situation with the company, the first round is very easy. They just get rid of their worst performers. If a department has, let's say, 10 people, they just cut one person. There you go. Easy does it. And how do they replace that guy? They don't. They say, hey, you like your job? You want to end up like Jimbo? No? All right. You can now do his job too. And that's the way it goes. Increased productivity, shareholders are happy, and here we are. Okay, so that's the story we have today. You know, I'm not here to tell people what to do with their finances. I think that a credit card should be used responsibly, and that if you have a credit card, you should be paying off the balance before it comes due. But everybody's in their own personal situation and so on. Anyway, so what I think people should get their own situation in order to do their best, work as hard as they can, try to, you know, source additional income in any way possible, and hope for the best. If you appreciate the information, hit that thumbs up button. When you hit the thumbs up button, you're basically signaling to the algorithm this is good stuff, okay? So my views are down worse than 2017 levels, I think, even 2015 levels. So, you know, if you want to support the channel, hit that thumbs up. If you don't really care, that's all. I hope you appreciate it. Thanks. Take care.